Imagine walking into your favorite burger joint and seeing a sign that says, Bitcoin accepted here, and we're keeping it. Sounds crazy, right? But this is exactly what's happening. Big and small companies around the world, from fast food chains to health tech firms, are hoarding Bitcoin like it's the new gold reserve. They're not just dabbling. Some are literally buying one Bitcoin every single day. It's as if corporate finance chiefs woke up one morning and decided to join a crypto shopping spree. Today, we're diving deep into this phenomenon, investigating the real motives behind why businesses are adding BTC to their balance sheets daily, and what it means for you as a retail investor. Buckle up. This story involves curiosity, a bit of humor, and a whole lot of Bitcoin. There's a global Bitcoin gold rush happening, and it's not being led by tech geeks in basements. It's led by corporate CFOs in boardrooms. Publicly traded firms now hold more than 688,000 BTC on their balance sheets, an all-time high that's climbing every quarter. To put that in perspective, that's tens of billions of dollars worth of Bitcoin locked up by companies. And they're not treating it as some speculative gamble like a meme stock. They're treating it as a strategic reserve asset, akin to digital gold. Business leaders are essentially saying, hey, maybe cash isn't king anymore. Maybe Bitcoin is. What's truly surprising is who is joining the party. It's not just the usual suspects, fintech firms or crypto startups. We're talking about unlikely players jumping on board. Remember that burger joint? It's the 91-year-old American fast food chain Steak and Shake. And guess what? They've become America's first fast food chain to launch a strategic Bitcoin reserve. Yep, they gave it a fancy name, where every Bitcoin they receive from burger sales goes straight into the company treasury. Over in the health and genetics sector, a company called Prenetics, which you'd expect to be focused on DNA tests and vitamins, is busy buying one Bitcoin every single day as part of its treasury strategy. In Japan, a hotel and hospitality company, Metaplanet, just raised a $130 million loan specifically to buy more Bitcoin, turning itself from a sleepy hotel operator into a bold Bitcoin whale. And of course, we have the poster child of corporate Bitcoin hoarding, Michael Saylor's MicroStrategy, now rebranded as Strategy Inc., which has been gobbling up Bitcoin for over 5 years and currently holds an eye-popping stash. Spoiler, they now own so much Bitcoin that it's about 3% of all the BTC that will ever exist. It's as if corporate America and Asia and everywhere else got FOMO hearing about Bitcoin and said, we'll have what Satoshi's having. Companies are even hosting conferences about this trend. Just this week in Abu Dhabi, executives flocked to the Bitcoin MENA 2025 summit, where the mantra was that businesses should consider Bitcoin not just some risky experiment, but as a serious part of corporate strategy. One headline from the event proclaimed that companies are now acquiring Bitcoin at nearly 4 times the rate new coins are being mined. Think about that. Corporations are stacking sats faster than miners can dig them out of the blockchain. If that doesn't say gold rush, I don't know what does. So, what's going on? Why are burgers, biotech, and boardrooms all converging on Bitcoin? Let's break down a few of these stories, because within them lie clues to the real motives behind this daily Bitcoin binge. Picture this. You walk into Steak and Shake for a milkshake and a double steak burger, and you see a promo for a Bitcoin steak burger. Buy a burger, get $5 in free Bitcoin on the side. That's not a joke. It's exactly the kind of promotion Steak and Shake ran via a partnership with the Fold app. Earlier this year, Steak and Shake started accepting Bitcoin payments at hundreds of locations across the US and Europe. And they found it not only cut payment processing costs by 50%, but it also turned their restaurants into a hotspot for Bitcoin enthusiasts. Suddenly, their diners were filled with folks who cared as much about sats as they did about fries. Then, on October 31st, which the crypto crowd cheekily calls White Paper Day, the anniversary of Bitcoin's white paper, the 90-plus-year-old chain did something radical. They announced the creation of a Strategic Bitcoin Reserve, SBR. In plain English, that means every single Bitcoin that customers pay at Steak and Shake doesn't get cashed out to dollars. It stays in Bitcoin, held by the company as a treasury asset. They basically said, we're not just crypto friendly, we're true believers. Even more, for every Bitcoin meal sold, Steak and Shake donates 210 Satoshis, a tiny fraction of a BTC, to support Bitcoin developers, as a nod to the community and the tech that makes this all possible. So, they're investing in Bitcoin and investing in Bitcoin's future at the same time. The results? Well, if you measure in burgers sold, it's been a hit. Steak and Shake reported a 15% jump in same-store sales last quarter, outpacing every competitor in their segment. Apparently, waving the Bitcoin flag attracted a swarm of new customers, and probably some tech-savvy millennials who might have otherwise ignored a 1930s-era burger chain. It turned out to be a marketing masterstroke. Crypto clout brought real revenue. Their message to the world was clear. Bitcoin isn't just for memes or day trading. It's a community, a technology, and possibly the future of corporate treasury. In other words, they signaled that holding Bitcoin can be part of a company's identity and strategy, not just a stunt. But let's not be naive. There's likely a shrewd motive here. By funneling Bitcoin payments to their treasury instead of converting to cash, Steak and Shake is effectively speculating that those BTC will increase in value over time. They're turning burger revenue into long-term investment. It's a hedge. Rather than watch inflation nibble away at their cash profits, they'd rather HODL some Bitcoin and see if it grows. And as a bonus, they got tons of free press and became the cool fast food chain among the Bitcoin crowd. Not bad for a company founded in 1934. If the burger example surprised you, Prenetics takes it to another level. This is a health sciences company, DNA tests, supplements. Yet, in August 2025, it announced a plan to buy 1 Bitcoin every single day. By late November, it had already stacked more than 380 Bitcoin, worth over $40 million, and called the strategy a long-term, disciplined, daily accumulation. They also made headlines with a one-time buy of 100 BTC right after raising $44 million in new equity. Strategic investors in that round included Kraken and even tennis star Aryna Sabalenka, all signaling support for the move. After the purchase, Prenetics held 378 BTC worth about $46 million. Why would a healthcare company dive this hard into Bitcoin? Their CEO says it's about protecting against currency debasement and modernizing their treasury. He argues traditional cash management is outdated and that Bitcoin is a better long-term reserve. Prenetics frames its business as a dual engine, growth from health products and long-term value from a Bitcoin treasury. In short, they're betting their shareholders will benefit from 2 big trends at once, the wellness boom and the rise of digital assets, and they're backing that belief with daily buys. Of course, Prenetics isn't flying blind into a volatile asset. They boast a strong balance sheet, over $120 million in liquidity, 0 debt, so they can afford to take some risk. All their BTC is reportedly held in secure custody, as you'd hope. By being the first NASDAQ-listed healthcare company, to integrate Bitcoin into its treasury. They also got themselves a unique spot in the market. It's a bit reminiscent of Tesla's move in 2021 when Elon Musk put Bitcoin on Tesla's balance sheet. Except Prenetics is going about it more systematically and talking about it a lot. They even have a real-time dashboard for their Bitcoin holdings on their website, embracing transparency to assure investors that they know what they're doing. The motive for Prenetics? Partly, it's ideological, a genuine belief that Bitcoin will protect and grow their capital long term. Danny Young basically hinted that with governments printing money like there's no tomorrow, a chunk of cash is better off converted into Bitcoin, which has a capped supply. It's also opportunistic. They saw a chance to raise money. The equity offering was oversubscribed, meaning lots of demand, and those investors were on board with the Bitcoin plan. By leveraging that capital into BTC, if Bitcoin's price skyrockets in coming years, Prenetics could massively boost its asset base without further diluting shareholders. On the flip side, if Bitcoin crashes, they'll have to answer to shareholders as to why a health company was messing around in crypto. It's high risk, high reward, and they're betting big that it will pay off. Next stop, Japan, where things get even wilder. Metaplanet Inc. started out as a company managing hotels and dabbling in Web3 and metaverse projects. Sounds harmless enough. But in 2024 to 2025, Metaplanet made a hard pivot. It transformed into what some call a digital asset treasury, DAT firm, basically a company that holds a ton of crypto on its books as a primary business. Think of it like a MicroStrategy of Japan. They have been aggressively accumulating Bitcoin, tens of thousands of BTC. By mid-2025, Metaplanet had over 4,500 BTC and openly aimed to hit 10,000 BTC by end of 2025 and 21,000 BTC by 2026. Yes, 21,000 BTC, as in 0.1% of all Bitcoin that will ever exist. Perhaps not coincidentally, 21,000 is 1,000th of 21 million. They view BTC as both a reserve asset and a hedge against inflation and yen devaluation. In late November 2025, Metaplanet's ambition kicked into overdrive. The company revealed it took out a $130 million loan just to buy more Bitcoin. That news sent its stock price up about 7% in a day, and it lifted other Japanese Bitcoin treasury stocks as well. Apparently, there's a mini ecosystem of Japanese firms doing similar strategies. Even an energy company and a medical group got caught up in the Bitcoin fever, and their stocks jumped in sympathy. It's almost like a new sector has emerged. Forget biotech or fintech. Now we have bit-tech companies whose core strategy is amassing Bitcoin. But here's the twist. While the market cheered Metaplanet's latest buy, there's growing skepticism around these Bitcoin-heavy firms. Many of the copycats who followed Saylor's playbook earlier in the year saw their share prices sink below the value of the Bitcoin they hold. Think about that. The market is saying these companies are worth less than their crypto assets. In other words, investors aren't fully convinced these are great businesses, perhaps due to concerns like management execution, lack of profitability, or the costs or risks associated with holding so much BTC. It's similar to how closed-end funds sometimes trade at a discount to their net asset value. For the company, that's a bit of a slap in the face, and potentially a trap if they needed to raise capital. Issuing shares at a discount is painful. Metaplanet, for its part, is trying to distinguish itself. It prides itself on transparency and frequent updates on its Bitcoin buys. It's become Asia's largest corporate Bitcoin holder and one of the top 10 worldwide. The narrative they push is that they're visionaries, positioning for a future where every company will hold Bitcoin. In fact, the company's leadership predicted that all companies will eventually hold Bitcoin as a treasury asset. They want to lead that trend. They even talk about channeling a portion of Japan's massive $7 trillion in idle cash into Bitcoin investments, leveraging something like 20 times buying power, which hints at using financial engineering to buy Bitcoin, a fancy way of saying using debt or other instruments to multiply exposure. The motives for Metaplanet are a mix of bold vision and perhaps a bit of desperation. As a traditional business, hotels, etc., growth might be limited. By embracing Bitcoin, they attract a new class of investors, potentially boost their stock, and position themselves in the news. It's a bit of a if you can't beat 'em, join 'em scenario. They saw MicroStrategy in the US make waves and likely said, why not us? Why not Japan? Also, in Japan, low interest rates and huge corporate cash piles have been a thing for years, so converting some cash to BTC could be seen as putting idle assets to work. However, the risk Metaplanet and others take is huge. They're even using loans to buy Bitcoin. The interest on one of Metaplanet's new loans is floating and renews daily, meaning if interest rates spike, they could be in trouble. They do claim they can pay it off any time, but still, using leverage to buy a volatile asset is like juggling flaming torches. It works until it doesn't. If Bitcoin's price were to plummet, these companies could be left with heavy debts and massive losses. The stock surges we saw might reverse real fast. And indeed, Japanese regulators and investors are casting a wary eye. There's talk of new crypto funds launching and even mutual funds being allowed to hold crypto, which might be a safer way for investors to get exposure than buying into risky operating companies turned Bitcoin funds. No discussion of corporate Bitcoin strategies is complete without MicroStrategy, or, as it's now officially known, Strategy Inc. Yes, they really downplayed the micro in their name, perhaps to reflect their macro-sized bet on Bitcoin. This is the company that started it all back in 2020. CEO Michael Saylor was one of the first to say out loud, "We're going to put our treasury into Bitcoin because cash is trash." In his own words, the money is getting weaker. The assets are getting more expensive. Bitcoin is the apex property of the human race. And for Saylor, there is no second best. Bitcoin is it. That conviction led MicroStrategy to begin buying Bitcoin aggressively starting August 2020. They started with a few hundred million, then kept going, funding purchases through corporate cash flow, then through issuing debt, and later by selling new stock. It was like watching a snowball roll downhill and turn into an avalanche. Fast forward to now. MicroStrategy's Bitcoin holdings have reached staggering levels. As of December 2025, they hold 660,624 BTC acquired for about $49.3 billion in total. Let that sink in. Over 660,000 Bitcoins. When Saylor said, "go big or go home," he really meant it. This hoard is roughly 3.1% of the 21 million BTC supply cap. One company, 3% of all Bitcoin. Wild. They achieved this by continually leveraging their status as a public company to raise more money. They even created a new series of preferred stock to sell on top of common stock offerings. Just in the first week of December 2025, in 1 week, they sold nearly $1 billion worth of new shares and used it to buy an additional 10,624 BTC. MicroStrategy basically operates like a Bitcoin accumulation machine at this point. But here's the plot twist. This year, 2025, has shown that betting the farm on Bitcoin can be a double-edged sword. Bitcoin had a huge run-up, crossing $90,000, but also had periods of gut-wrenching volatility, a mini crypto winter within the year where prices slid amid macroeconomic headwinds. MicroStrategy's stock, ticker MSTR, has been on a roller coaster accordingly. If you invested $1,000 in MSTR at the start of 2025, at one point it shrank to about $637, a 37% drop, even while the S&P 500 was up strongly. Why? Because the market started worrying that Saylor's 4D chess with Bitcoin might actually be a dangerous gamble. The company now holds about $60 billion worth of BTC at current prices, but it also took on $8+ billion in debt to finance part of it, and issued so many new shares that existing shareholders got diluted by over 10% this year alone. In other words, yes, they have a ton of Bitcoin, but shareholders' slice of the pie got smaller and the company owes a lot of money. Michael Saylor, who famously said he'd never sell any Bitcoin, had to slightly eat his words. He introduced the possibility that Strategy Inc. might sell some Bitcoin if its stock market value stays too low compared to its Bitcoin holdings. It's MNAV. Basically, if the market doesn't properly value the BTC on the books, they'd consider distributing some value to shareholders, like via dividends funded by selling BTC to close the gap. That was a bombshell admission for Saylor, and it signals that even the high priest of hodling has a breaking point. He's also issued a special preferred stock that pays dividends, and to cover those dividends and interest on debt, the company set aside a USD reserve. They're planning for a scenario where maybe, just maybe, they'd need to trim their Bitcoin position if things got tough. So, what's driving MicroStrategy, and what should we take from it? Saylor's motives are clear. Hedge against inflation, bet big on Bitcoin's long-term upside, and give a low-profile software company a bold new identity. Early on, it paid off. MSTR stock exploded alongside Bitcoin in 2020 and 2021. But the strategy got riskier as MicroStrategy leaned into heavy leverage and dilution. The company effectively became a leveraged Bitcoin proxy, with debt interest and corporate overhead acting as fees. If Bitcoin doesn't rise fast enough, shareholders absorb the downside. The lesson is simple. Even if you believe in Bitcoin's long-term future, overexposure and aggressive borrowing can turn conviction into a liability. By now, you've seen a few patterns: fear of inflation, belief in Bitcoin's long-term value, desire for higher yields than cash, brand positioning, and perhaps a dash of FOMO. Companies are buying Bitcoin for a mix of financial, strategic, and even cultural reasons. Here are the big ones: hedging against inflation and cash decay. With inflation and currency debasement in recent years, many firms see large cash balances as a liability. Bitcoin's fixed supply makes it attractive as a long-term store of value. Companies like Prenetics and Metaplanet openly frame BTC as protection against weakening fiat, chasing upside. Plenty of executives believe Bitcoin will be worth far more in the future. If they're right, today's purchases could transform their balance sheets. For brands like Steak N Shake, holding sats from sales is a direct bet that those coins will appreciate more than dollars. modernizing the treasury. Some view Bitcoin as a new reserve asset, similar to gold or foreign currency. Conferences like Bitcoin MENA now teach CFOS, how to integrate BTC into corporate finance. For these companies, holding Bitcoin is as much about modernization and financial independence as it is about returns, attracting investors and boosting the narrative. A bold Bitcoin strategy can raise a company's profile and, at least initially, lift its stock. Investors love a strong story, and where adopting Bitcoin gets attention fast. It can draw new shareholders, create buzz, and differentiate a company in a crowded market. Customer engagement. Consumer brands can tap into Bitcoin's passionate community. Steak and Shake is a good example. Promotions tied to BTC generated free marketing and goodwill. Aligning with crypto culture can bring in new customers and create a fresh identity. Competitive pressure and FOMO. Once a few companies in an industry adopt Bitcoin, others start wondering if they're falling behind. Boardrooms talk, investors prod, and no one wants to miss a trend. High-profile moves from firms like MicroStrategy or Prenetics often spark imitation. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Alright, with that necessary disclaimer out of the way, had to do it, let's talk about the flip side of all this enthusiasm, the risks and potential traps in these Bitcoin treasury strategies. Because while the idea of companies stacking sats is exciting and validating for Bitcoin fans, it can also go south in a hurry if not executed carefully. For every rosy scenario where these companies look brilliant for buying Bitcoin, there's a darker one where the strategy backfires. Here are the main risks: volatility and financial strain. Bitcoin can move double digits in a day. That makes budgeting and cash planning tough. Big swings can distort earnings, and if a company overallocates and Bitcoin drops 50%, it can threaten operations or even lead to bankruptcy if they're already stretched. MicroStrategy itself has warned that a major misstep could be disastrous. Leverage and dilution, borrowing or issuing tons of stock to buy Bitcoin raises the stakes. Debt still comes due even if the price falls. Dilution weakens existing shareholders. If the market drops too far, leveraged firms might be forced to sell at the bottom. Some executives effectively turn their companies into leveraged Bitcoin vehicles, which is a risky detour from running an operating business.